Okay, so welcome to our stock analysis request. If you have any chart you want me to look at, or simply just market discussion, what's going on with the current market, whatever lah, all the recent stuff lah. I think there's a lot of stuff going on this week also. And if not, we just do just AMA, ask me anything, just chit chat and chill lah. Okay, so for those who have been coming to this session, I always see that same few people lah, which is good, which is good. I'm very glad if I'm seeing that a same supporter coming in. It makes me happy. It makes me happy. Bumi Tama, we are your fan. Thank you. You're supposed to oh no, hey, you better rest. With the course coming soon already. Must be 100% mental. The mental state must be there. Good evening, one. But also good to see this session. Slowly, more and more people are like last time in the past. I don't know lah. I think I have like only 6 or 7 people. At max is like 11, 12 because like it's not webinar ma. Then sometimes we talk a lot of like I wouldn't say nonsense, but we just randomly go off here and there. But I think this session is also a good chance for me to share certain things, certain views, how I do my trades, how I manage my portfolio, which sometimes very hard to share within the weekly webinar lah. Weekly webinar only 1 hour, and I think you all also know lah. Sometimes 1 hour always exceed one, always exceed one. Like when I am given like 15 minutes to share stocks in Sonic R webinar, right? I'm like 15 minutes, I can't do anything. I can't do anything with 15 minutes. What you want me to share within 15 minutes? Like I can't share anything that is substantially helpful to whoever listening, because end up I just like zoom through everything without really explaining much, and then like I mean, people follow lah. People doesn't follow then never mind lah, because I don't really want people to blindly follow. At least you should understand what's going on lah, so you can sort of like prepare. You have some expectation when price move down or move up or whatever. Golden Energy rack slower. Golden Energy, I run ready. Golden Energy, I up lorry ready. But I have my own reason why I up lorry lah. Okay, wait. Let's look at one by one. Okay. Wait. I'm a little bit disoriented. Because I shift a lot of my my watch list and all my counters. You can see everything is very messy. It's been a while. I clean up this whole stuff. Okay, let's look at. Oh wait. This prop night is very funny. This one like want to I might like that every day open gap up and then close down, open gap up, close down, open gap up, close down, open gap up, go up and then close down. I don't know what's going on. I just need one red nice candle to go down like that. Then that's like, okay, short liao. But every day giving me this kind of I might pattern since like beginning of February like that. Since beginning of February. Let's look at Golden Energy, okay? So sometimes, right, when you are trading, right, you have to remember the question is not always whether things can go up, still can go up, still can go down or not. Because I can honestly tell you, I don't know. I seriously have no idea. So what you have to do is, yes, you have a good entry, you have a good stop loss there. But now what you need to ask yourself is, okay, if you are fine with this profit, you can run first if you scared. But if you want to hold until higher price, right, then definitely you also carry the risk that things might come back down lah. Of course, we will try to use the previous level as the so-called TP level, somewhere around 4.7, 4.6. And most of the time, right, you can see that price tend to like go up, rest a bit, and then go up some more. For example, if you look at Geo Energy is more chongsters, yeah. Geo Energy is like super chongster, rocket chongster. It's like did it came out? I think it came out on the scanner Let me see. Let me double check my scanner. Let me double check my scanner. A lot of people viewing already. Let me double check my scanner. But I'm so focused with US market that I'm kind of like missing out. 28, 28 together with Samudera. 28. So it was here. It was here. It was here. Should have looked at it. Should have looked at it. Should have looked at it. Oh no, so sad. But at least we got RH petrol gas lah. At least we got RH petrol gas. We can't catch everything. I'm so sorry. I'm so sorry. We can't catch everything. Geo energy. Yeah. So for example, now geo energy and golden energy, right? Both are coal. Okay. Both are coal related, but geo energy is running. So maybe golden energy can still run. But of course, if you want if you want more profit, then you risk. Your risk is also that it is coming back down. So it's very hard for me to tell you that, okay, this one can go up and then you end up holding your whole position and then next day this whole thing come down. So you have to understand your risk, okay? But my personal view is I think it will rest a bit and then still can go up. That's my view, okay? But you have to understand your risk when you are holding. So it is something like snowflake like that. Let me talk about snowflake first, okay? Okay, so just to get the white elephant out of the room, who managed to diamond hand your snowflake position through the earnings? Anyone managed to get that 20% gap down? Wow, Marcus Wong, show. Super show, right? Morning wake up suddenly, like I went to sleep with like my open position was like 2K, 3K, and then morning wake up like 8K suddenly like shoot up. And I was like, wow. For yes, correct. Me also. I actually set alarm at like 4 a.m. 4 or 5 a.m. like that. I actually woke up at 5 a.m. to sell during the post trading, but I still keep a little bit of my position there just to like leave it there. But it was one of the best trade. But okay, so since you managed to hold through snowflake, right? I think the same kind of risk management logic apply, but snowflake is a little bit more easier to execute, mainly because the short position is somewhere at 295. We entered the short at 295, right? So before the earnings, right, price was already here, meaning you are in a good amount of profit. You are actually in a very healthy amount of profit, like 10% down already, very close to 10% now. So your risk here is that, number one, if you scared like earning good, then gap up, right? Then of course you can take that 10% profit and run, which is still good enough profit. But if you are willing to like risk a bit and like, for example, if let's say the price gap up, right, your 10% paper profit is gone, then it simply become a break-even trade lah. So if you are willing to take that kind of risk, right, you can actually hold through and you will sort of get rewarded lah. So you should not look at it from the perspective that snowflake confirm can go down after earning or not. If confirm can go down, I throw my life saving already. You cannot look at it in that aspect lah. But I think this one all of you should know already lah. I'm just trying to sort of like reiterate, especially when we have a very volatile market situation. Okay, so in this case, personally for me also, since I'm already in profit, right, I'm already in good unrealized profit, I figure out that, okay, like if the worst thing this can do is it gap up 10%. If it gap up 10%, then at most my paper profit disappear, I exit with break even lah. But that's a better risk to take than, for example, let's say you miss the 295 entry and then you go and chase and then you enter at like 252, and at 252, right, you are probably already in like a small rate position, small rate unrealized position, or maybe a break even position. Then it might be riskier for you to hold through the earnings, because now you actually risk losing money already, rather than those who enter correctly, we break even lah. So we are going to use this similar mindset, similar strategy for the children place short. We still have children place short. Hopefully today go down some more. I think everything is like red like that. Let's look at it, minus 44. So the children place, right, the entry was around 70, somewhere there. Somewhere there, 70.55. And currently it is like 60.1 like that. So we are somewhere about 13%, 14% profit, which is already a very good profit. It's already very good paper profit, unrealized profit already. If you run here, it's a legit shot already. But I'm not going to run. I mean, if you want to run, it's fine. I'm not going to run. Eventually, I will put up official update to say that if you want to run, it's fine. If you are willing to risk a break-even trade, you can actually hold through the earnings also. Of course, when we put up these trades, right, we try to do, I try to do some research, some fundamental breakdown stuff to ensure that, okay, this one is definitely going to do bad. But of course, we cannot like 100% confirm lah. So we always need to think about what are we losing if things goes in a different direction. So in this case, we will do the exact same thing as Snowflake. I'm willing to take that break-even trade if the earnings go and things decide to gap up. But if not, we can hopefully get another good leg towards the downside, maybe at least until like 55 here lah, 55 here, or even maybe 50 there. Who knows? Hopefully lah. But to be honest, I don't think this one will break down 20% like Snowflake like that. Snowflake was really overpriced. Snowflake was really overpriced. So I kind of expected Snowflake to either, number one, right, break down by 15-20%, or if the result is like exceedingly good, right, it is going to gap up like 10-20% like that. So it is either way lah. And in both ends, I am willing to take that risk. But for children place, I don't think it is going to gap down very aggressively or gap up very aggressively. It will like kind of like maybe 1 or 2%, maybe 3 or 4%, somewhere around there lah. Similarly for Rivian also, right, the same logic applies, but this one, I think depending on where you enter your shorts, this one already 24% in profit. Even without the gap down, you are like CC already. You are like super duper nice position already. But Rivian have to be a little bit careful because it's very volatile. It's very volatile. If you see this range, right, it's 30%. Within this range is 30%. But at least you are in profit lah. So there are, I put out update to say if you are going to take profit, right, just take profit, it's fine. And I think this is considered a very good short trade really lah, 25%. So in an official sense, right, I consider Rivian trade close ready. But personally for me, I'm still holding. I will hold through the earnings also lah. Okay, so we see how also for Rivian. Let's look at Golden Agri. So Golden Agri actually hit my TP. So I personally TP Golden Agri already. In terms of agriculture, right, I find it, to be honest, I think Golden Agri still can go up some more because this chart is a very nice chart. You can see that we have a low here, and then we have a higher low here already, and then now it break out of the resistance here already, this resistance level. So I mean, this one you all will probably recognize head and shoulder trade, a reverse head and shoulder, and then the neckline is broken, whatever lah. Whatever you want to call this lah. I got a few trader friend who have a much more crude pattern compared to head and shoulder. They call it something else, which I'm not going to say here because I have to upload this into YouTube. And then I don't want to get struck down by YouTube. But you will realize that Golden Agri first trade was way back in March 2021. That's like 1 year back. Actually, it's a 1 year anniversary. We hit TP2. We just hit TP2 like now. So what you notice is Golden Agri is a very slow counter. I think it can go up, but it's a very, very slow snail counter. And the last trade that I previously held, it was from October 6th. So I was holding it until now, simply because I have nothing else to buy also, because like during January, February, all the tech selling down, but Golden Agri is like in its own world. So I was like, oh, okay, that's good. So at least golden agree like tanking there a bit. So I leave it there lah. If you want to hold this, it's fine, but please understand the nature of the stock, because one look, right? One look, this counter is a very slow moving counter. You actually have this whole period. Look at this whole period from November 2021 to February 2022. It's like one line. Price is not moving. It's like one line. It's like steady, like really steady there. It's not moving at all. So it will always like not do anything for 90% of the time. And then once in a while, it shoot up. And then after that, it continue to remain motionless. And then after that, it shoot up. And then after that, it might continue to remain motionless. Or worse yet, it can come down. It can come down to like trick you like that. Okay. So this one can go up, but slow and steady. Okay, so there is a reason why I let golden agree go. I just TP everything lah. Number one, TP1 was hit. TP1 was hit. Number two is I still have ADM. Archer Daniel Midland from, oh sorry, someone was, oops, meant to sense. How do I? Okay. Yeah, so I still have Archer Daniel Midland, which is also a commodity counter. I don't want to overlap, so I just let golden agree go lah. Then I will hold on to Archer Daniel Midland. And secondly, why I let golden energy go was I'm still holding on to Rex International. I mean, I know one is oil and gas, the other one is coal. Like one is both are still considered energy lah, and both are moving due to politics. The Russian-Ukraine conflict, because I think suddenly when oil and gas become very expensive, right? I think people are looking for alternative, which is coal. So I think coal is the cheapest lah, especially for don't want to sound snobbish, but especially for third world country, right? There's a lot of third world country who are still using coal power plant lah. So I mean, a lot of first world countries suddenly become very environmental conscious, solar panel, whatever lah, all these environmental friendly stuff, which I am like, I support you, but you also have to understand that there are third world countries which need the cheap power to make sure that their people can live, their people have electricity, can cook, can eat, can survive lah. So we have to bear that in mind also. So I think this is one of the reasons why coal is suddenly going up, or maybe Russia is buying a lot of coal to power their Bitcoin machine, Bitcoin mining camp within their underground to fight the sanction. I don't know, but it is definitely triggered by high oil prices. Okay, so because of that, right, I don't want too many counters in my portfolio that is very sensitive to politic news. If one day suddenly OPEC come out and say like, oh, they are going to increase their oil production by I don't know how much, then maybe all your oil and gas counter can start to drop, and then oil price start to drop, then maybe soon after coal also start to drop. So this kind of thing, right? Very sensitive lah, very sensitive. It's one of the reasons why I personally refrain from trading oil and gas counter also. If you have been with me since last year, right, you probably will not see me posting a lot of oil and gas counter. Even during earlier this year, right? When we were looking at the scanner, like January, right, you can see a lot of oil and gas counter. Murphy Oil, Diamondback Energy, Hilberton Company, Cosmo Energy, Earthstone Energy, Canadian Natural Resources. A lot of oil and gas counters showing up. Within Petroleum, Suncor Energy on the US scanner, but I always have that fear lah. I always have that fear. Magnolia Oil and Gas. So, but of course, in this case, along with the inflation, rising interest rate, along with the Ukraine-Russian conflict, right? Both of which are very good for the oil and gas and energy sector, which cause all these to run out. So sometimes it is good to reflect a bit on your own personal trading habit, and then try to kind of like ensure that you are learning something. So in this case, right, what I learned is that I should pay a little bit more attention to what's going on geopolitical, all this stuff, right? And then at least I will be able to catch some oil and gas. At least now I don't feel very bad because we managed to catch RH Petrol Gas, and Rex International still not there yet, but in profit lah, in profit. So I'm a latecomer lah. I'm a latecomer to the energy sector, and at least we catch what's that golden energy also. But I mean, like when you look back, right, when you look back in hindsight, right, it's like geo energy since 21st Jan, golden energy, RH Petrol Gas on 4th February, RH Petrol Gas rest. Then all your agriculture counter showing up. Southern, Southern joined the party today. Yeah, Southern is still right. Still is going up also. See the S&P recovering now. S&P recovering now. Oh, how come they are not on my scanner? Why are they not on my scanner? Why is 9天 there? Let me check. Let me check. Fortress. Whoosh. Hey, this is nicely. This should be on my scanner. I think did it not meet certain threshold? It should meet the threshold. Never mind, I will double check my scanner later. I'll double check my scanner parameters later. Let's look at Southern Alliance. Still is currently coming up. US still is on US also. Holy crap, plus 10%. This one look a little bit more hard to play. This one definitely will miss my scanner. This one, I know why this one will miss my scanner. But Fortress Mineral shouldn't miss. Southern Alliance, volume a little bit dry. If it were me, right, I think I will go for Fortress Mineral. I think Fortress Mineral is tradable. Is it tradable? Let me check. Let me check here. Can squeeze. I think can squeeze in. Can squeeze in. Let me go into the forbidden zone. Let me see. Forbidden zone is the 15-minute chart. Okay, maybe 1 hour. Can try. I think this one can try. Lower profit. I think this one. I think this one can try. Can try. Thanks for bringing up. I will bring this up tomorrow. I think this one can try. Yeah. Aluminum stock all going up. Some of my cost trader have Alcoa also from quite a while back. I don't know when before the whole conflict started. Let's take a look at some of the pre-market stuff. Okay. Oh yeah, just sharing. I think you all will see the Patreon post also. Finally, I'm back to positive. Finally, I'm back to positive for year 2022. It's like it has been such a tough battle, but of course the main winner definitely Snowflake lah. The main winner was definitely Snowflake. You can see here is plus $4,000, But what you have to know is that there was a losing trade on Snowflake also. So this is losing trade plus winning trade, and it is still exceed by $4,000. So I think my second trade was probably seven to $8,000 around there. Or I think $7,000. Because I still have some that is still holding lah. Some that is still holding. Rivian definitely still holding. So I'm banking on this to be a like 10K trade also lah. Hopefully cross finger. I'm really hoping Amazon will throw their Rivian holding ready. Place holding racks. So you can also see I have MasterCard, which is like red, but doesn't matter because that's the purpose of like having long and short at one go, because sometimes some of your longs are people in a unrealized rate, right? Your short actually kind of like help you like tank the rate, tank the unrealized rate for a bit. At least it's not like your entire position, your entire portfolio is rate. At least your paper, your unrealized P&L looks good, and you don't really feel a lot of stress also lah. So and also I think luckily for me, ADM was going up while the rest of the stuff are going down. I think this is one of the best possible scenario that you can have lah, where your longs are going up and your shorts are going down. But of course, although I would say luckily, right, it is with some level of planning and intention also, in a sense that I am going long on certain sector, commodity, and this one is MasterCard is financial transaction, and the other one are all the and Rex also lah. Rex is oil and gas, while the shorts are on the overpriced tech counter that is not profitable, overpriced EV company that don't even earn a revenue, or apparel company that is like in a very big debt and not really making a lot of profits, that's affected by all the higher inflation rate due to all the rental store that they are doing. So they are not like random long and random short. Also, you have to ensure that your portfolio is managed extremely well in this kind of market situation. Previously, back in 2020, 2021, we don't need to care. We just, the market shoots up. The market stock only go up one direction, and anything long also go up. So we don't really care. We don't really have to care so much about portfolio lah. But when the market condition change, right, we have to pay a little bit more attention to what you are putting into your portfolio. So that's why, like, for example, I really think that Western Union is a good short, but I don't want to put Western Union in because I have MasterCard long. So if I put Western Union shorts in, right, it's like MasterCard go up, Western Union go down. Then if Western Union like go up, then MasterCard go down. That is like it's like they cancel out each other lah. They cancel out each other. So maybe if I do not have a MasterCard long there, I might go for Western Union. So it's like you cannot just like pick and throw everything you like lah. You have to plan out a bit more, and eventually it will work out also. And it is one of the reasons why I say this period, right, is a very good learning opportunity period, especially if you can make it out alive, because it's going to teach you a few things that you will never learn anywhere else unless you've been through the process. You cannot learn it from books, you cannot learn it from course, you cannot learn it from like going into some training program, because there's no way, there's no place out there that is going to teach you this kind of portfolio management, what to add, what not to add, how to manage a long and short position, all these things together. And it is, even if they teach you, right, you are not going to execute it properly, or you may never have the chance to execute. And by the time you have that opportunity to execute, right, maybe you blown your account already, or maybe you are too demoralized by the 20%, 30% drawdown that you have, that you don't really want to like trade anymore. You just like go and hide one corner. When market recover, then you come back, and when you come back, right, yes, market recover, profit. Then 2 years later, when market go down again, the same thing happen. You go one corner hide, and then like, it's a vicious cycle. It's a vicious cycle. At some point, right, you need to know how to do this, and the only way to go through this is through through this kind of live, so-called live trading. I mean, I'm not day trading live, but at least you see it real time how the position are being managed, what is going into short, what is going into long. And one of the things you can see is also how the index is going nowhere. The index is going nowhere. We have been here. We have been here since like end of February. So we have been here for like 2 weeks like that already, and in fact we have been down for quite some time already, and every time price recover very sharply, right, our portfolio doesn't really change so much also, because things that we are shorting, right, they are simply very weak counter and they are not recovering with the market. And if you have been paying attention, right, during these 2 major recovery day, the index is going up, everything is running, but you will notice that counters like Snowflake or counters like Rivian, they are not really going up as much. They are like kind of like flat, or maybe they go up by quite a bit. But eventually, when market goes sideways, right, they started to go down also lah. So, so these are the kind of thing that you can only learn when you see it happen live. And of course, I truly hope that even though I have quite a number of subscribers, those who attend manage to learn something lah. Those who does not go through this, I mean, I will say it is very sad that it is opportunity lost lah. And hopefully, since we are managing fine, right, we can like get up to maybe 40-50% this year. Hopefully, cross finger. So previously last year at the height of my 2021 performance, my ROI was 45. Then during the tech sell down, I dropped all the way to like 28. And now slowly climb back to 40 already lah, and we can see how it goes from there lah. So far our position are still very, very good. I have a lot of long so-called position that I want to go long on my watch list, but haven't triggered yet, still hanging around there because current market condition a little bit bad. Okay, a little bit bad. And since we are holding on to shorts also, right, we just see how the market goes now. Okay, so we don't really need to care about, I mean, when we first start this whole long short thing, right, when I start to say you need to go 50% long, 50% short, make sure you prepare your tiger broker short, whatever, it was somewhere around end of January. And then our short positions start to come out like maybe middle February like that. And you will notice that all this, right, is way before the Russian-Ukraine conflict occurs. And when it happens, right, a lot of things start to drop left and right. Also, then market recover, like very volatile, but the portfolio doesn't suffer. And it is how it is sort of like designed in a way that like whatever stuff that come after, right? I mean, it doesn't really affect us. But of course, I do not want to say that war is good for us making money on our shorts. It's not like that, but just so happen that we are already in majority short position when all these things happen lah. But of course, we also try to sort of like leverage on the fact that all prices are going up. We were able to get some Rex International and RH Petrol Gas also. So that is definitely a plus point also. So when things out of our control happen, right, we will definitely try to sort of like leverage the situation to see what we can get. But we have to also structure our portfolio in a way that it is not too drastic and it is not too affected by the market itself, meaning your beta cannot be very high, your overall portfolio beta cannot be very high. You can go and find out the beta for each of your stock. For example, Yahoo Finance. You go to Yahoo Finance and then you click in all your stocks. For example, now I'm going to click in ADM, right? You can see the beta value. Currently, the beta value for this is 0.78, meaning if the S&P move by 1 point, then ADM is going to move by 0.78. So it is like it doesn't move as much as the S&P itself. So it is a little bit disconnected. So if your beta is very high, if your beta is high like 1.5 or 2, right? Then if S&P move up, right, your portfolio will shoot up a lot more than S&P. If S&P move down, right, your portfolio will dive a lot. So it usually happens when if your portfolio have a lot of Apple, Microsoft, Nvidia, and like all the index fund, all the Tesla, all this lah. So you want to ensure that your portfolio average beta is below 1. And you can do that by simply go and find out all the beta value of all your positions. And then you just, and then you just divide by the number of positions that you have lah. But of course, that is with the assumption that your position are equal in value. So for example, you can see my position are all 10K, 12K, 11, 11, 11K, 11K. So meaning I can simply divide by 4 lah. At least they are not very far apart lah. But if you have position like 5K, then 20K, and then 15K, then you cannot divide by 5 already. You have to do weightage calculation, which is a little bit more complicated, but you can still do the calculation. So for me, right, to be simple, I think this one you all know, you all should know also, most of my position are always around the same size. I do not have one position that is like 2 or 3 times more than the other, unless of course I am stacking winners lah. But at this stage, I don't really have winners to stack yet. most of what I have are short position lah. So when you start to stack winner, and then you need to adjust your beta calculation to your to whatever percentage of your portfolio that your each of your position is lah. But of course, it doesn't mean that you must have your portfolio below 1.00 beta at all time. That's not what I mean also. If the market is one direction going up, right, it is good to have your portfolio beta slightly higher than 1, so that when S&P go up, your portfolio go up more than the S&P. But when the market is like swinging, don't know what, doing what, like morning got the bomb shelling of the nuclear reactor, market go down, then after that the nuclear reactor is fine, market go up, then the power speak in the Congress go down, go up. I don't even know what's going on already. I gave up making sense already. But but at least your overall portfolio beta is not above 1. So it doesn't really matter. It doesn't really matter. At least your portfolio can manage the volatility. Yes, correct. If you have short, the beta is negative law. So which is why my portfolio is mainly below 1 lah. So it is towards the negative side lah. At the same time, my long position are also very low beta. So in a way, it doesn't correlate to the S&P by so much lah. That's why you do not want to go all negative also. If you go all negative, right, you will be way towards the other side, where when the market suddenly recovers, right, you are going to the other end already. You are going to cut loss on all your short position, which like back to square one lah, back to square one. What counters has the most potential long? What do you mean by what counters have the most potential long? Are you asking for what are my potential long counters, or among all the long counters I have, which is the one that can go up the most? I don't think I can tell you beforehand which counters can go up the most, because I mean it's not a crystal ball lah. I have no idea lah. I mean the reason why I'm shortlisted counters to long is because I think all of them can go up. So I can't tell you which one has more chance or which one have less chance. If this one have less chance than the other one, then I'm gonna just not put that in my watch list. I'd rather trade the one that have more chance, right? So I'm truly unable to tell you like which is more, which is that. I don't have a calculator that say, okay, stock A have 90% chance going up, or stock B have 80% chance going up. It's not really like that also. Most of them are somewhat equal. That's why we have like winning rate, because your winning rate over maybe your past 100 trade, you have a winning rate of 64%, or for me personally, my history have always been 60 to 70 lah. So last year, the highest was 70, but towards the end of the year, it dropped all the way to 62 because we started hitting stop loss during December like that. There was like 5 or 6 stop loss, like one after another. So my winning rate from like close to 68% dropped to 62%, but it is around 60 to 70 within that range. So if you ask me, then all of my position have a winning rate of 60 to 70. I can't really tell you which one has more, which one has less. So if I give you 5 stocks and I tell you that, okay, within that 5 stock, stock A have 80% chance, then stock B, C, D have 70% chance, then who is going to trade the 70% chance? Everyone is going to trade the 80% chance, right? Then what happens if A hit stop loss, then B, C, D, E all hit TP? Then what? Then I will get questions like, hey, why you say A 80% chance? Now that one hit stop loss, the other all going down. So what? Your rating is wrong. Your rating is like what? So means your 80 mean cannot hit, is it? So you have to understand about all this also, because right now I'm not only trading myself, I'm also sharing. So when you share, right, you have to be a little bit careful of how you share also, because there are a lot of followers, and some followers, how the mind they process certain trades, right, is very different. I cannot expect everyone to be expert risk manager, expert trader. For example, I expect my course trainee to be able to pick out the trade idea and decide for themselves if this trade idea can fit their portfolio. For example, if their portfolio already have like 5 oil and gas counter, I can trust them that they are not going to add in another Rex International on top of their Keppel lah, Semcor Industry lah, Chevron lah, Chesapeake lah. I can trust them not to do that. But when it comes to sharing with public, there will be some guy that is like, the portfolio already have AMV, Nvidia, TSM, Micron, and then he's gonna add another one more semiconductor into his portfolio the moment I post it. So have to be a little bit careful lah. Okay, so to be frank, trading is not crystal ball. I can't rank which trade has higher percentage, which trade doesn't. How I pick trade is based on, can it fit my portfolio? What are the sector? What are the beta that I already have, and does it fit to my overall portfolio, and does it fit into the current market condition? So these are the questions that you should be asking. Feel so sad for the founders. Yeah, correct. Tesla can consider drop quite a bit. You mean for long position? Currently, the whole EV industry is like dropping left and right. So Tesla, not really. Let's take a look. Okay. Currently, right now, I'm also considering fundamental as one of the criteria. So not everything is technical already, because we have to be a little bit careful. You will see that when earnings come out, right, those that earnings cannot make it, the forward guidance very bad, all drop like 20%, 30%. Those with good fundamental guidance, they went up a lot. So we have to keep that in mind also. So okay, so number one rule, my number one long position rule: we don't buy just because it is low. If you want to buy because it's dropped low already, right, that is like no, like no, you have to give me something more. Like I can tell you the story of Alibaba. This one, I have people can buy. Until now, got people asking can buy. I can buy, already. It's like it's one of, like, there was a period I was so frustrated with, like, people asking me. I was like, why do you want to buy? Seriously, like why do you want to buy? So yes, Alibaba is not Tesla, definitely no. But somewhere along here, right, a lot of people will probably think that, hey, Alibaba can recover, like everything's still uptrend. But you don't buy into downtrend, just as you don't short into an uptrend also. So currently don't really see any higher high yet. Don't really see any form of higher high yet. Let me show you golden agri. Okay, let me show you golden agri. I think it will give you a good idea of what kind of chart you should look out for when you want to bottom pick. Of course, we don't just blindly bottom pick based on chart lah. We do have to apply a little bit of fundamental lah. So golden agri, right? You can see the first position in 8 March, right? First position, it was on 8 March. So 8 March was somewhere here. Somewhere here. Okay, so the first entry was somewhere here. So why do I buy there? If I think golden agri is going up, why did I buy there? Why not? Why did not I buy here? If I buy here, the profit, like, don't know how many 100% already. Don't know how many 100% from here already. Like 100%. So why did I not buy there and I only buy here? Because at that time when I buy in, the counter have established a few higher low already. And that gives you a good indication that this one should be able to go up some more. At least the higher low is being established. But if you go and blindly jump into this just because the price is low, there is a good chance that it can go down some more. There's a good chance that it can go down some more. And this is something that I always try to bring up. I mean, even though it is something that being often brought up, but I think whenever such question come out, right, it is good to go through, because sometimes we can forget we can get so engrossed with our trade that we can forget. So Tesla, right, at this point, I don't really think so. I don't really think this is a good long position yet. when we clearly see a downtrend here that is happening. So what I want to see is at least an up move, and then maybe like retest the support. Okay. It is not worth it to pick the bottom just so you catch this 10-20%. That's not worth it, because most likely if you catch that, right, things can go down some more lah. Baba black sheep kena slaughter. So even so for me, right, when I was trying to enter shit, let me pick out one counter that I want to enter. YZJ. I actually wanted to enter YZJ, but there was like this kind of pattern, this kind of candle coming out. So a little bit scared also, and you can see that for YZJ, right? It came out on the scanner, and when I kind of like putting this in my can enter that mode, right? It is because there is a so-called a higher low that is being made here lah. I would never enter here. I would confirm guarantee chop. I will not enter this breakout. I will not enter this breakout because it can just go down. But at least now there is like a good confirmation, and price is going up a bit. So you can enter maybe here or maybe here, who knows? But we see how same price is coming right now. But if I can enter here, right, I think it will be good. At least we got a confirmation here. So the thing is, it's not worth it to enter at this breakout just so you can get like additional 0.07. If this kind of number affects you a lot, most likely you are scalping lah. You're always running with a few pips and then run, If you are running with such a small amount of profit, right, technical analysis doesn't matter already, because you can just go and scalp whatever high volatile counter. Don't need to care the technical, just go in, scalp that 1 or 2 pip can already. So that's what I personally think lah. So normally when we do technical analysis, we look at support, we look at trends, right? At least we want like 15%, 20%. We are not looking for a 5% profit like that. Similarly for golden energy also, let's look at golden energy again. Golden energy actually came out on scanner here. And I do have a few of my students asking me here can enter or not. And I was telling them, if you want to enter, okay, it's fine. But I'm personally, it wouldn't be the kind of counter that I would want to, and the trade chart setup that I will want to enter. But after we have like this pattern here, right? After we have this pattern, and then I thought, okay, maybe here might be better lah. At least we have a higher low here. So if my student, or for those who know how I trade, if you enter here, right, most likely you will get this trade also. Most likely you'll get the trade also, because your stop loss will be somewhere like here or somewhere lah. You will not get stopped out by this if you follow the so-called Nimbus Capital trading trading style, right? You will definitely not get cut out here. But there is a chance that this can go continue down. There is a chance. But at least now we more confirm lah, in a way, more confirm. So I enter lah. And that is also the reason why, right? I'm a little bit not not really want to enter this also. You can go for it, but there's a good chance that it can like this also, like golden energy like that. It can happen. But maybe if you have nothing to trade and then you are dying to trade something, right, you can go for it, but maybe the risk will be slightly higher lah. I will say the risk will be slightly higher. And the stop loss to put at 370, right? I think it's slightly far. You can go up to 380, but it gets a little bit dangerous. So really up to you lah. It's really up to you. Because for example, if you trade golden energy here, and you are that stingy person, go and put your stop loss here, right? Confirm take you out one. So from what we teach, right? If you want to trade here, make sure you can put your stop loss here or here. If you cannot tahan that stop loss, right? Easy, don't trade. But now when it came out here, it's ready to put your stop loss here already. You don't need to go all the way down there. Moss Burger, Mosiak. Oh, what's going on? Chung a lot though. Yeah, thanks for bringing this up. I think a lot of agriculture, chemical, fertilizer company all going up also, because I just read that Ukraine and Russia produce majority of the world fertilizer, which something I didn't have any idea about. Concentrated phosphate and potash crop nutrients. Company operate a business through following operating North America. Okay. I would put this in a momentum trade lah, like a speculative trade, because definitely definitely you have to get your stop loss here, which maybe can 30% is too much. You can chase this. If you chase this, right, your stop loss will be cutting middle of this rally, which you can get cut off when it retraces lah. So the question is not, the question is never if it can go up or not. The trend like this, it can definitely go up, but your risk lah is your risk lah. One thing you can do, right? Is you can go and find other chemical agricultural counters that have a better trade setup. You don't necessarily need to stick to this. So what I can suggest to you, this one is Nimbus Capital secret. You all don't go out share. You can come to your this stock screener in TradingView, right? It's free for use. So even if you're on free account, you can use. Go to US market. And then the screener, right? The screener, you can set up your own. You can set up one. So I'm just going to go US screener. And then within the US screener, sorry. Is it US screener? Stock screener, okay. Within the stock screener, right? You come to filter. There's no filter lah. So there's only common stock exchange. So that there's literally no filter except for market cap. So we want to have market cap because you don't want all the penny counter. You don't want all the penny counter showing up in your scanner. Okay. So I set it to 10 billion. 10 billion is good. 5 billion is also okay, but don't go below 1 billion. Don't go below 1 billion. Below 1 billion in US market is like penny stock. Then next, what you can do is make sure you have industry and sector here. You have industry and sector here. So you can come to here, right? You can come here, go and click industry sector here lah. Okay. And then after that, you click industry. Then you click this, and then you find your whatever, the chemical agriculture. Okay, then you have all your chemicals. So now there's only 4 here. There's only 4 here. Probably there's only 4 because we set 10 billion market cap. So maybe you can lower to 5. Okay, now there's 5 matches. So let's lower to 1. There's 7 matches. Okay, we keep at 1 now, okay? And then you go and like look through. So you see this one, haven't rallied yet. But if it break out, then maybe you can buy this. It's much better in a sense that if it break out, you can put your stop loss here. At least you are not chasing. But can go and read lah. Corteva is a global provider of seed crop protection solution focused on agriculture industry, contributing to food supply. The firm operates through following segments: seed and crop, blah blah. Okay. CF industry. What does CF industry do? Engage in manufacture. Oh, this is fertilizer. So this one also definitely same as Mosaic, a bit hard to chase really. But maybe this one you can watch list. So what you can do, you can like right click and then add to watch list, whatever. So actually these are not secret. These are actually stuff that if you explore enough, you will probably like know what to do lah. So I'm just telling you the kind of things that TradingView allow you to do, even on a free package, even on their lowest free tier, don't even need to pay a single cent. You have all these things available to you. So you need to learn how to use tools that are available to you lah. LSV industry. Holy crap, all the all the agriculture running. FMC Corporation. This one maybe another potential breakout trade. Who knows? Mosaic, okay, Mosaic run ready. This one what is this? Accessory for hydroponic gardening. Why is US in hydroponic? 7 billion market cap. Okay, so at least now we have Corteva and FMC, but it does seems like Corteva chart looks better. Up to you to decide on what is better. But I think this one look more bullish compared to FMC. Actually, FMC look bullish also. But if I were to trade FMC, let's say it breaks out. Okay, let's say it breaks out to maybe 125. Then my stop loss will be somewhere here, below this point here lah. Or you want to go all the way here also can 96. But let's set 2 points. Okay, let's set 2 points. This is 12%. This is 22%. Oh, that's fine. I think this breakout trade is fine. Yeah. So this is. I mean, whether 12% is fine or 22% is fine. Up to you lah. Up to you, because if you put at 12%, right, then your TP probably need to higher also. So you need to really account for all this kind of stuff. So these are the kind of things that you can do. Don't need to always stuck to one counter that you see or heard somewhere. You can always make use of this industry filter to help you filter lah. Yeah, Hong Kong also have, yes, correct. But Hong Kong, I don't trust Hong Kong market. I don't trust Hong Kong market. I don't want to. China XLX, China XLX. Currently, I'm just staying away from Hong Kong. Okay, this one all very volatile, very volatile. I don't like this two here. I don't like the twin tower there. But very volatile and not very. I don't know lah. I don't know. I mean, if US have good fertilizer counter, I'll probably go for US. Like who know what's going on in Hong Kong? It's like I see the Hong Kong chart. I see the Hong Kong chart is like cannot make it ready, cannot make it ready. That I was contemplating shopping at this point here, and then I have a lot of like I don't know. Bloomberg was telling me Hong Kong, China is the heavens, the safe haven play now because Euro jialat, US jialat, then Russia jialat. Like it seems like Hong Kong, China, but I see the Hong Kong chart like cannot make it. So sometimes when they say certain things, don't blindly follow lah. Have to go and take a look also, and you can see the China index also cannot make it. You know, they just came out a news that say China is going to face one of their growth GDP growth contraction which they have not faced before. Yeah, I think for now stay away from Hong Kong first. I think eventually at some point Hong Kong and China definitely will have a very good violent recovery, and when that recovery come, right, we will catch it. We will look out for it. We will definitely catch it, but we won't catch this lah. We will catch like maybe this. So last time I mentioned that we won't enter Hong Kong until it breaks here, but now I think it has been lower to here. It has been lower to here already. How's S&P doing? Hey, wait, what's the time now? What's the time now? Are we close to market open? 10:11 already. We are close to market open. Great. Let's look at the pre-market for our counter. ADM, how's ADM doing? Wow, nice. Wanna hit TP 了，冲啊秀啊 +1%. Starbucks, wow, gap down. Sweet. Starbucks gap down. So these are the kind of situation that you want. Rivian. Hey, just now was below 50 now back up to 50, but never mind. Anyone on Starbucks short? Who's on Starbucks short? Oh, nice. Okay, great. So Starbucks short also same. I'm gonna hold through earning. That's like in May. that's like May, but we see how lah. Okay, I think May too far off already. We see how, but I mean if it continues to go down and down, right? Then good. We will hold through. Who know, we will TP first and then add one more position. We see how it goes. Rivian. Okay, Children Place. Children Place is not very liquid. I mean, it's you can still buy and sell, but it's the trading volume not so high lah. So pre-market usually very quiet. What's the other one that I have? How's Snowflake doing? Snowflake is still dropping. Snowflake is still dropping. Western Union, I have not put out an official trade setup yet, but I do hope maybe some of you get it, because at this point, I think it's still safe lah. It's still safe to put stop loss here lah. I think it's still safe to put a stop loss here. But some of my course trainee managed to get it here, somewhere here lah, I think. Then builder first source, right? Builder first source is one of the counter that we want to short, but you can see that how it suddenly recover, and that's the reason why I did not want to jump in also. I was waiting for this breakdown lah. So when it comes to shorts, right, what we don't want is we don't want to short this here. We do not want to go and jump into the short here, because you may think that this is a lower high in the forming, and then it will go down, then this one become a lower high, but it can also be a higher low and go up. so have to be very careful. So normally when I look for short, right, I would prefer if the chart have make a double top, or it make a top and then it continue to make lower high and then drop. So if you look at, okay, Rivian don't need to look lah. Rivian is a straight away downtrend. But if you look at Starbucks, you can see here that there's a lot of highs here being made, and then it broke here. So I'm not going to short here, or maybe I might not short here also, but probably because back then market is still very bullish lah. But if I see Starbucks chart and it's something like this, right, I probably will not short there lah. I will wait for lower prices. And Snowflake also, Snowflake, we do have a double top, although these two top are very far apart, right? But even then, the short only came out here lah. The short only came out after this was broken. And even then here, right, we were punished. We were punished for entering too early. But after that, we have that confirmed lower high there, which we managed to short there lah. Shopify is a very good okay, no, sorry, I take that back. Not Shopify. PayPal, although in hindsight, or although suffer a loss, right? If we look at PayPal here, this point here, this is the point where my long will cut off because it gapped down. But if we look back in hindsight, right, this was definitely a good short setup lah. If short halts, then bopian lor, you can you cannot buy back. But if halt, they will usually unhalt lah. So I'm not really sure about US. If the stock halts, right, it's because probably it's too aggressive, like dropping down by a lot or going up by a lot. So in short case, probably dropping down by a lot lah. So they will probably halt for like maybe 1-2 hours just to see what's going on. Like, is there any stock market, any news, any manipulation going on, like how SGX does their query lah. When something go up so high, they will halt for 1-2 hours. They will perform a query, then after that is business as usual lah. So that is one of the most common halt, which happen very frequent. It happens so often that I don't really care anymore. I'm immune to those fear already. But if it does halt for more than 1 or 2 days, right, most likely there are some major news, and you pray that it is not a takeover news. If it is a takeover news, right, it's gonna gap up when it unhot. So there are a few ways to prevent yourself from shorting into takeover counters, but these are not 100% safe. These are just certain steps that you can take lah. But whenever you short, you are running into takeover risk. So one way to avoid takeover risk is you don't short things that are like down by 90%. Okay, you don't go and short things that are like already 90% down. For example, I will never short Nikola. Why do we short Rivian but we don't short Nikola? Look at Nikola. It's like down by 90%, 95%. So you don't go and short things like this. You don't short things that have very small market cap, meaning the market cap is like less than 1 billion. So maybe like 500 million or 600 million. These are pennies. If you look at the scope of US market, right, 500 million company is like roadside ice cream stand like that. Anyone can just, any big company like Microsoft or Google can just come in and buy that company out. And to them, it's like throwing away $1 like that. Okay, so don't short small market cap counters. So these are the few things that you can take note. And also don't short counters that are at the brink of bankruptcy. Okay, like for example, don't go and short Evergrande when you hear all the bad news already, because there will be buyout, there will be government interference, all this coming in. So and number one, there will be someone will come and save the company, buy out whatever, then the counter is going to rally and you are going to lose a lot of money. Or number two, the company going to declare bankrupt and the shares will get delisted, and then now you are forever stuck in that position. You can never cash out. So if it delays, right? If it delays, you go and find your broker lah. Go and find your broker. Most if they are holding some shares that can help you cover, hopefully, then you are still okay. Or they will probably for a short-term period provide some means and way for folks to cover their shorts lah. If not, right? If not, most likely you will be stuck. Your money is as good as gone lah. The margin that you short is as good as gone lah. It's like how you long a position and then that company gets suspended, the entire position is as good as gone also. So it's similar risk lah. It's almost a similar risk. I mean, these are the kind of risks that we take when we are trading, and also is one of the reasons why I always recommend your portfolio, right? Make sure you can enter 10 position. If you have 10K portfolio, make sure each position is like 1K, or maybe you can enter 8 position, each position is like 1.25K. If you have like a 50K portfolio, right, then you can go for probably around 12 position. So if one of your positions sway lah, better not lah, touch wood lah, get suspended, get delisted, whatever, you try to do something funny, I don't know, then the company goes bankrupt. At least, right? At least you are only going to lose 10% of your portfolio, which is as much as how much CFD traders are losing on their losing trade. So I can definitely tell you that. So it's like it's something you can recover from. It is not a career-ending move lah. So there's a lot of layers, a lot of level to protect you. But I mean, if number one, these are the risks that all traders take when they are trading. If you want to remove this risk altogether, right, the only way is to not trade. Don't trade at all, then it won't happen to you lah. But there is definitely a lot of things that you can do to protect yourself also lah. One of my encounter with such cases was OSIM. Back then, in my earlier days when I was trading, I shorted OSIM, and then the next day OSIM halted for 3 days, and then my short position stuck there. I 3 nights cannot sleep. That time I was like 24 years old like that. That's my savings. That's my savings. Like supposed to go uni lah. Then then after that, after 3 days, hot OSIM come out say they are going to do buyout, and then I think the stock rallies like 20%. I forgot already. I can't remember already. I think I lost like close to 7-8K. But back then my account was like only 25K. So actually I lost like close to 30% of my entire portfolio on that one trade. Then as I look at it, right, there wasn't any reason to short also. I'm not sure why I went and short. I probably read, okay, you can short this from somewhere. I mean, I'm not pointing finger, but back then, right, I don't know how to generate my own trade ideas. Like, I don't know where to look at what counter to, like how to shortlist counter and how to find what counter to trade lah. Normally what I trade is mostly what I see from Facebook, what people trading, and then I will apply my own stop loss and technical analysis, but I'm not the one that come up with this counter to trade. It's always someone else. So like after that period, right, one of the skill set, the most important skill set that you can that most traders have difficulty attaining is coming up with your own trade ideas, like coming up with that idea that, okay, I want to buy this, I want to short this, these are my reason, these are the justification, these are my risk level. So I think that's one of the hardest thing, because like the process is a very long, very long process. You can have tools like scanner, screener, but at the end of the day, scanner is also not like automated where you can close eye buy everything that shows up on the scanner. You're definitely going to lose a lot of money. You still need to apply something. You still need to have certain process in place in order to like, okay, this is what I want. So for example, okay, Rivian is what I want, Starbucks is what I want, but why Starbucks? Why Rivian? Why not Lucid? Why not Tesla? Why not like for example, why Snowflake? Why not CrowdStrike? So I think if you all see my Snowflake video, right, I think you can somewhat sort of understand the workflow, the thought process. You can kind of like go and look through it. But sadly, my Snowflake oops, sorry. My Snowflake video only 70 views. It is one of the worst views, but I can understand because Snowflake video was a private video. So normally private video, very little views lah. But even then, I mean, there are like over 300 subscribers lah. So I mean it's okay. People don't see, but what I feel is that sometimes you can miss out something good, in this case a Snowflake shot, because during my entire career of learning trading, right, certain important trading tips and skills that I pick up here and there, right, it is not someone like put me down in front of a table and then they started lecturing me, they started teaching me, okay, you should do this, you should do that. It is not through this process. Yes, I mean, I have approached traders who are better than me to like maybe learn from them or ask them certain questions, but most of the more important things that I usually learn, right, it is always from some random YouTube video, someone explaining something, and then whatever that he was explaining, right, just happened to catch my attention, and then I was like, that makes sense, like maybe I should start doing that. Then after that, I will go and like click every single one of his video on his page, and then I will be very sad. That's like the only one or two video that this guy posted. It's like, hey, you have such good idea. Why? Please post more. So I mean, you will never know where you are going to learn certain stuff. You will always be bits and pieces here and there, and then it is your job to tie them up together to make it into something that becomes your own strategy that you can apply and do yourself. And I think this is the reason why the trading journey is a very long and tiring journey, that most people do not come out successful, because it's very hard, and not everyone on this learning journey for trading, they all take the same path and they all come out with the same. But it is not like everyone goes into this uni, everyone learn a macroeconomic course and then come out with a degree. It's not like that. Everyone is on their own little path that they are taking. Maybe some of them are learning the like divergence and convergence, then some are learning volume spread, then some are learning fundamental. And it's not to say this one correct, that one wrong, but each of the strategy have their own merit. But the key thing is, how do you make it work for you? And each of them is in their own path. And then sometimes they go and quarrel and argue with the other. Why you use RSI or Bollinger Band? You should use volume spread. Volume spread is the correct one. Then another one, hey, alamak, I using Elliott wave. You all don't know Elliott wave. You all noob don't know how to trade . Then another guy, hey, why you all these technical people? Actually, it's the fundamental that move the market. And then so each of us is on our own little path, and whether or not we succeed is really depend on us, how we go through this path . Let's look at, okay, 2 more minutes to market open. Let's let's look at Wall Street bet. Let's look at Wall Street bet. I think this have to become a thing like to close off our session. Daily discussion 3.2K. Let's look at it. AMD post. What happened? Did AMD rally? Did AMD rally? Oops. The AMD rally? Never rally what? Why? He should be happy. I mean, if he shot yesterday, he should be happy. Unless he sell the puts. Yeah, well, my test. Wait, is this the correct day? Yeah, it's the correct day. What? Yeah, it's the correct day. What's going on? If you bought puts, you should be happy, ma. Oh, it's green. Oh, because it's green by 1%. It's sometimes they're very funny also. Like small price movement, they very kanchong. XLF looking ugly. XLF is the Tesla WTF. why are people so engrossed over 1%? It's like our Rivian is like 5-10% every. Hey, why is ADM going down? Starbucks, okay. Rivian, okay, going to 50. Children place. This one heck care. This one move very slow. Where's Snowflake? Okay, recovering. Never mind. Let them be. Western Union down 1%. Okay, this one looks good. People think they know what should happen to the market, but they don't. Others latch on to dreamy sentiment and get hooked. But the market is more resilient than you think. Holy crap, Hansing is here. This is true though. So many Tesla. Why are there so many Tesla? Did some news come out for Tesla that I did not know of? Falcon 9. So this is SpaceX. Tesla supplier Panasonic. There's something about the mega factory can open, right? I think that's the only latest news that I heard. And nothing else really. This one need to go below 50. Why is it like you can see here, right? You can see this candle. The low is 50.02. It just cannot go below. Hey, why is it recovering? Children place minus 1%. Okay lah, this one's low. Okay, let's continue. I think I'm becoming like Wall Street bets also. Our CPI is fake though. Ignore. Okay. VIX and SPY decoupled. Something will have to move. What's a quick 200% play? US Steel 0 DTE call. Oh yeah, let's look at US Steel. Let's see how US Steel is doing. Wow. Okay lah. Oh, there's one counter I'm actually looking at, but it is too short also. I was looking for something too long, but I always find something too short. Is this one? Celsius Holding. I will still looking up. You can see here, I'm looking through certain stuff, and something very fishy with this company. I mean, I don't know lah. Maybe because I'm not like familiar with how they do income tax, but you can see right for the year of 2021, 2020. So let's look at this column. You can see that in 2021 they went from 7.9 million profit to 4 million loss. So definitely this loss is coming from the operational expense lah. So I actually did a calculation. So 2022, 2021, the cost of revenue, the cost of goods sold, right, increased by 6% from 53% to 59%. And that's something bad because now you are spending more to make the same amount of revenue. Meaning, I think they are, I don't know, raw material increase or whatever, I'm not sure. Then their operational expense increased by 2%. So both of their cost of goods sold and operational expense increased by quite substantially, which is why they went from 7.9 million to 7.9 million profit in 2020 to 4 million operational loss in 2021. Okay, so at least we know where the loss is coming from. But but then in 2020, right? In 2020, they have 8.6 million profit and they have 1.3 million gain from foreign exchange. Like normally foreign exchange, if you are making business overseas, right, there will definitely be some foreign exchange gain and loss lah. But the funny thing is that this is too big for the amount of profit that they are making. But that's okay. That's never mind. That's close one eye lah. Close one eye. They are already in profit lah. Then in 2021, they are already in a operational loss of 4 million. Then if you look at the net income, they actually made a net income of 4 million. So there's 8 million coming from somewhere and it is from income tax benefit. Why is there a $8 million income tax benefit in 2021? I try to Google it, I try to search here, search there, cannot find. Even on their, this is from Motley Fool. They released this article after their Q3 result. Okay, so you can see that already in Q3 that there is already a big where is it? Sorry, there's already a big income tax benefit already. But they did not mention, Motley did not mention anything regarding the income tax benefit. Like it just says they are earning this, they are earning that. That's why I hate Motley Fool. I seriously hate Motley Fool. In fact, some of their so-called investment advice make me lose a lot of money when I was in my early days lah. And let's look at the press release. So this is their so-called press release. It's the same one, like, but when I try to Google tax benefit, this is the only one that I can find lah. They never really mention anything regarding tax benefit here. They did mention that they have net income of 3.9 million, which is slightly misleading. Slightly misleading, which is because they are making 4 million loss. They are making 4 million loss from their operation. The only reason why they have 3.9 million profit is from the tax benefit. So is this tax, I mean, if it's tax benefit, right? Let's say for some reason it's legit lah, okay? For some reason they got tax benefit. It's supposed to be a one-time thing. It's meant to be a one-time thing. It's not like every year they are going to get 8 million tax benefit. I mean, I don't think that there is some government subsidies towards energy drink that they are selling. So I don't really have knowledge in this aspect, but the fact that they are profitable because of $8 million tax benefit is very suspicious, and it's such a big amount. So yeah, and if you look at their PE ratio, price to earning ratio, it's 560. It's like it's totally overpriced. It's ridiculously overpriced. and is a 4.5 billion market cap lah. Yeah, so in terms of chart, there's a high, there's a lower high, another low high, then maybe we can, I don't know, hopefully go to zero lah. I don't know lah, I don't know. Yeah, so this one on my potential short list. So this is consumer discretionary beverage. I mean, it is not fruit juice, it is more like sports drink. So it's not like Coca-Cola like that. I would think. What do they do? What's this? Blueberry energy drink. Okay, it's an energy drink. Yeah, so sometimes I will go through this kind of fundamental lah, like the surface level lah. So these are not like you need degree or master in accounting economic to make this kind of analysis. It is something that you can just, like, if you do often, you can pick it up, and it, for me, when I look through this, right, it takes me less than maybe 50 minutes to kind of like pick something up lah, because let me go through the process, right? The first thing I will look at is I will look at the net income, and the moment I see such a big difference, right, first thing I will find out is, okay, so what is contributing to this loss? What is contributing to this loss? Oh, sorry, here, this one and this one also lah. Okay, but firstly is this level before all the tax and amortization and interest and all those nonsense lah. So you want income from operation first. So the moment I look at this, I want to find out why are they making a loss. So here, either if they make a loss, right, there can only be two reasons at this level. Number one, your cost of revenue increase, or number two, your operational cost increase, because all the one-time expenses are here in the second layer. So all the one-time expenses are not here. So these are all your operational expense and your cost of revenue. So at this level, if it's already negative, right, it is quite clear that your operational expense is increasing. So which is why I sort of did a quick calculation to see how much they increase, and we do see quite a substantial increase there. So at least at that level, right, everything checks out, everything fine, everything normal. And then as I go lower to net income, right, suddenly they are making a profit. So from 4 million loss become 4 million profit. So it will make you think that there is a 8 million non-operational profit coming from somewhere. So you want to dig a bit lah. And of course, this one don't even need to dig. You can straight away see that it's coming from tax benefit. So yeah, so it now like take less than 5 minutes lah to sort of make that kind of so-called analysis. I don't really think, I think it kind of disrespect the real fundamental people who are making the real analysis, but I mean, just very surface level, very surface level. As trader, right, we don't really need to dig so far until like don't know until where you are not trying to uncover some accounting fraud like muddy water or iceberg research like that. We are not going until that level, but we are just trying to like see at the surface level what's going on. So we'll definitely, I mean, I'm not going to dig further already. The only thing I need to know is this counter has 500 PE ratio, over 500 PE ratio at trailing 12 months. And they are not making any operational profit for 2021. And it is due to the fact that the operational expense increase, the cost of revenue also increase. And these are something that is caused by very simple inflation. Because maybe raw material going up, wages going up, blah, blah, blah. So, and these are not costs that they can easily reduce also. What are they going to, if they want to cut costs, what are they going to do? Do they want to cut costs on marketing? If you cut costs on marketing, then next year or your revenue going to drop and it's going to be even worse. So general and administrative expense, I think these are also part and parcel. Maybe they can automate something or what. But I mean, if it's something that cannot be reduced, right? Maybe they need, I don't know, a change in management or what. But it's not something that can be done very easily. It is part of your operational expense. So just by these two alone, right? I have a overpriced counter who cannot make operational profit, and the chart itself is good to short. It is not like at the top, and it has not fallen all the way down also. Let's see how much have it fallen. I think about 50%, 45%. It is still shortable. It's still shortable. When we short snowflake, it was like, I think 40% also. It was about, okay, 35% like that. But for 50% is still can be shorted. And it's sorry, not this. And it's $4 billion market cap, so still safe. So if you think about it, right, maybe when the counter was here, it is probably like $8 billion market cap. so it gets shorted down to $4 billion. So we see how it goes. We see how it goes. Shortable and Tiger. That's good. As long as it is shortable and Tiger. Let's see how minus 53. Okay, how is our shorts? How is our nice, sweet lah? What big liao? Children Place also. Starbucks also. Okay, this one don't care lah. This one steady. Who's still on Rivian? Anyone still on Rivian? Or anyone TP Rivian? I think not only Rivian, Xpeng dropping also. Nikola dropping. Tesla. You have to see one by one because each counter have different, I would say, shorting expense. But I can tell you that the short interest rate, right, is very minimal. It's very minimal, but it is good to check. It is good to check. Sometimes they are like 3% per annum or 6% per annum, depending on the counter. So let's say if you have a short interest that is let's say 10% per annum lah, okay, 10% per annum. Let's make it slightly high. And your short position is 20K, okay? If your short position is 20K, you need to pay how much my maths fail? How much is 10% of 20K? 2K, okay. So if you short 20K position in this counter, you need to pay 2K per year. Per year, not per month. But let's say you only hold this short for 30 days. Okay, you only hold this short for 30 days. So what you do is 2K divided by 365 times 30. You will pay $164 lah for holding this short. But wait, the but is there. That is if you short a position that is worth 20K. Okay, if you are shorting a position that is worth 20K, your portfolio better be 200K because you want to hold at least 10 position, meaning $164 on a 200K is very small. So if you scale down everything, right? If you scale down to a 20K portfolio, you are shorting 2K, then you are only going to pay $16 for holding 30 days. Meaning the majority of your majority of the losses that is coming from your short position, right? It is going to be your actual loss, not the holding fee. So I mean, it is something that we cannot escape. This holding fee, that is something that cannot escape. If you do not short because you scared the holding fee, right? Then you are foregoing the entire trade structure, or you are foregoing the entire opportunity to short. And the shorting opportunity like this, right, doesn't really come often, because for the whole of last year and 2020, we have zero short position. We didn't short anything at all. And in fact, when the short position come, you can see that it is very good. It's very favorable. It's very good to short, and it's like one of the, I wouldn't say easy money lah, but it is one of the so-called fast money that you can make. So if I have to pay like $16 to be able to short, then I mean I'm gonna pay a lot, but do remember that is based on 10%, 10%, most 10% interest per annum, but most short position is like probably 3 or 5%. So you can even cut down the just now the amount I calculate by half like that. I think Rivian is like this ready. Hopefully can go to 30 ready. Hopefully can go to 30 ready. Refresh. Not refreshing. Okay lah, at least going okay lah. Okay, let's look at some more stuff. Then we can close off at 11. 10 more minutes. Up big green today, then dump just before close. I didn't think it was even up green at all. Futures recover a bit, but it didn't up green lah. I feel like time just slowed down. VIX chart look hella bullish. let's look at, oh holy crap. Okay, so let's talk about S&P a bit. Now it seems that 440 is the resistance. Okay, this is the futures lah. The futures, the inverted comma future. So this is the actual index. So I think the resistance here is 4400. It just seems to break there. But if today close below this level, right, maybe 4300, right? I think we I think next week might retest here lah. I don't know. I think this does not look bullish to me. I mean one of the reasons I say is because I am majority of my position are short, but I don't feel anything bullish in terms of macroeconomic news wise lah. Things are always something bad going on. And even if you take the Russian-Ukraine conflict out of the picture, right? The whole interest rate and the inflation, it is definitely bad. I mean, yes, the market have priced in, Powell say the March 25 BPS rate is already priced in, this and that, but at the company level, right, they are going to face a lot of headwinds, such as the supply chain issue is still there, the higher wages, and then because of inflation, right, in the future, not many people are going to spend a lot of money really, and we can see the consumer sentiment yesterday coming down. So there's a lot of negativity lah, and it doesn't look good lah. But definitely all these so-called negativity comes in because price has already gone down. That's why the mood is very bad. So if that's the case, right, then there's no reason for anyone to suddenly pick the bottom here and then like hope that everything recover. Because if you pick the bottom here and it decide to go down some more, and let's say you are someone very rich, a lot of money, you don't really care, right? Then you can average down some more, but what you are doing is you are just losing time, and all those money that is being stuck there not doing anything is wasted opportunity cost. So you can always like do a long short portfolio, short a bit here, long a bit there. For example, if one day my MasterCard gets stopped out, doesn't matter, is negative 1000, but doesn't matter, everything else is still making money. So if it get cut off also, never mind, because all your other shorts are making profits. And eventually when things recover and certain resistance get taken out, then you can go in, and then after that market recover, and then all your long position will earn lah. But during this so-called the purgatory, the transition phase, right? You don't need to pick the bottom here lah. You seriously don't need to pick the bottom here. Where is VIX right now? I think VIX nowadays is forever at 33, forever at 33 level. Okay, so S&P 500, right? On Tiger, you cannot short the S&P 500 as it is like that, but you have to short the SPD. Yeah, correct. The SPY lah, SPY. You type in SPY, which I believe is the SPDR ETF lah. So you have to short that lah. If you are on CMC, then you can actually short the index itself. They call it the US 500 CFD, but exactly the same thing. Exactly the same thing. They are tracking the S&P lah. I wish I could see the future. It will make this trading thing a whole lot easier. Number one superpower. But imagine the spoilers. Buying me a mansion in Russia after this is over for the price of trailer in Midwest. Red by green. You just make me color. Is now a good time to get into forest trade? Took US 28 days to take Iraq, 5 days into Russia taking. Hey, how's the NFP? What was the NFP result? So laggy. Oh, good, nice. Okay. Wow. Beats expectation. See, like we have a very good NFP, but the S&P is dropping. But the S&P is dropping like 1%. In this kind of situation, right? Any good news with NFP lah, this lah, that lah, whatever lah, it is an additional reason for the Federal Reserve to raise the rate lah. Like we have consumer spending high. Okay, this is good news. Raise the rate. It's like Singapore also, where we have our last GDP was very good, and normally good GDP means it's time to increase GST. It means everyone is making money. Everyone have money to spend. It's a sign to raise GST. Long the Western world and the US economy. If anything, this situation has shown that the future does not belong to unpredictable autocrat. Down with Queen. Y'all think all still have much room to move. It's so far up already, but I don't see any other play I like short, medium term. Oil and gas sanctions against Russia are not even decided yet. They want to pump this back up a little before 9:30, or they lose on the put they wrote. Let's look. Russia recommend fertilizer. Oh, no wonder all the fertilizer going up. Normally this mod, the one that posts, right, is legit lah. It's legit because it is a mod. But of course you go and do own research lah. Russian vacation gonna be hella cheap. Okay. my bladder has no chill. You can pee on. Oh my god. Some of the stuff I can't read out. Why buy gas when you can skate there? S&D looking cool. Green by close, buying after open. Okay, these are not interesting. I hope retail leave market in growth and then bloated 55 plus point average American doesn't invest. Just watch my bank account transfer 118K to IRAS today. We'll have another 46K given to CA on Monday. Damn, taxes stuck. Yeah, US capital gain tax is like horrible, man. It's like I don't if I don't know if I live there, right, I probably wouldn't trade. It's like it's so tough for retail trader. I'm not sure how much is their tax, but from the way I'm reading here, right, it seems quite high. Palladium, are you still bullish? I got engaged a few weeks ago. I'm letting my fiance and my mom plan out the shit. Yesterday, she told me it's gonna be 20K for food and drinks for 60 people. I almost had a heart attack. She told me not to worry, about it. Her family wants to pay for everything. I proposed with a family heirloom ring. Just don't have that kind of wealth. What else can I offer? I don't see. I'm not going to read that comment yet, but I think the reply are not going to be very good. Offer to save money on a wedding. No one really wants to go and YOLO it into 0 DT calls. Backyard barbecue and a bounce house. Spending 20K is big down. When you need 20K for something, you'll be grinding and thinking about the 60%, $333.333. The most valuable thing you can give someone is your best friend. You see all the stupid comment coming in. Get in super good shape and be a great person to her. This your wife, fam. Okay, at least at least someone with a heart. Something handcrafted out of passion. Yeah, I always believe in that. If you wanna give something to your loved ones, doing handcrafted is the best lah, compared to expensive gift. But of course, I mean, this wedding is a different thing. How to get rich in 5 simple steps. Get a job as financial analyst, forecast earning way below expected earning, load up on calls or sit stock, wait for inevitable earning beat. Someone in this thread literally wrote this: news doesn't affect the market. You may think it does, but the move was going to happen before the news. Got some of you truly just backgrounds together. I also believe this though. I mean, not 100%, but I somewhat believe this. Like the market will move before the news. But if the news is something different from what the market expect, right, then it is still going to respond to the news. But before that, it will already move. Like for example, I think I always use this example. Why is it recovering? Ayo, recover liao. Never mind. But wait. Like for example, right? If let's say if let's say the market expect Singtel to make 5 million profit next year, the market is going to go up before Singtel actually make that 5 million profit next year. The market is going to go up first because of the expectation already, especially when if Singtel say, okay, they expect to make 5 million next year, like forward guidance like that. So market go up already. And then next year, if Singtel makes 10 million profit, which is 2 times of what they expect, then market definitely is going to go up some more. And people will think that market goes up because they make 10 million profit. But no, it actually went up because market expect something else. But when the news come out, right, it's even better than what they expect. So they go up some more. So when market go up some more, right, it is with the expectation that maybe next year they will make 20 million. So they move up first lah. They move up first. But if let's say next year they don't make 20 million, they make 15 million, right? Then overall they are still making a lot of profit, but the market might come down really. And then when this happens, a lot of people will be confused lah. Like, hey, last year make 10 mil, this year make 50 mil, also good, a lot of profit, but why now price go down? So the price go down because maybe the market expect the next year to make 20 mil because they are expecting like, I don't know, 100% growth every year, something like Snowflake like that. They always have 100% growth every year. But the tricky thing is that as trader, right, we don't really know what is being priced in, what is not being priced in, and it's quite hard to tell. It's quite hard to tell. And in US market, I think that's why the forward guidance are very powerful in the sense that if the forward guidance is bad, right, the price just drop down from building like that, because with that move you can guarantee chop tell that okay, the market actually expected something really lah, and now the forward guidance was very bad. US soft inflation by not giving you money to buy. Oh yeah, let me refresh. Market bounce. Yeah, market bounce. I think market bounce. Okay lah, kind of like still there. Who knows? I mean, we will never know. Who knows? Tomorrow wake up, the whole thing green, and then like Rivian plus 15%, all this. No one knows. No one knows. Children, please. Okay, these are still okay lah. Starbucks, okay, still okay. Lucid pump up after being downgraded to 12 by Morgan. Let's take a look at Lucid. I think I was looking at it just now. Wow, went straight to green. Went straight to green. Tesla also green. Rivian green, yeah. Rivian green, yeah. Okay lah. I think they need some relief rally lah. After dropping so much. Like from here, from this top here, 25% drop. It's okay. At least we still have children place going down. Starbucks also like I might like that. What? Xpeng still red though. Xpeng is still red. But good to Nicola still red. So you can kind of see the differentiate the good one from the bad ones in a way. But does this mean that Rivian is the good one? It is like smack in the middle. It's like green red, green red. The rest are like very clear green and clear red lah. Russia buying Robinhood puts. I think something wrong with Robinhood. They block the they block the buy button on GME and AMC, and they disable the sell button on SPY. Not sure how true, but if this is true, right, that's ridiculous. Why can you not sell SPY options? Bulls in shambles. Robinhood, WTF are you doing? Robinhood hacked by Russia. Robinhood inability to. I think let's look at Robinhood. Let's look at Robinhood. Imagine you're on Robinhood and then you cannot shop Robinhood because they disable it. I think that will be like a newsworthy. Only 1%, really. But look at how much this thing dropped, man. 86%. Holy crap. I didn't know they were this jialat. Look at the net income. From 2.85 million to negative 3.69 billion. From how on earth did they spend 5 billion in operating expense? That's ridiculous. US Commerce Department new regulation identifying 91 entities that support Russian military activities. Okay, let's take one final look and then we call it a day. We meet back tomorrow. It's still very red. It's still very red, but why is my review not minus 5%? It should be another minus 5%. 1.49%. 59. Okay, but as usual, anything can happen. Anything can happen. So not gonna comment much lah. Later jinx the whole thing. Singapore kind of like hanging around here. Kind of like hanging around there. Like want to go down, don't want to go down like that. Hong Kong is just Hong Kong cannot catch a break, man. Hong Kong seriously cannot catch a break. Recently, the price action of oil, like every time I look, it will be this kind of shooting star candle. Then I blink my eye, it become one big green candle like that. But this level of oil is very crazy. It's really very crazy. You can see for WTI, right? It is already above this level already. It's going back to 2008 level. And it was only 2 years ago that we went into negative oil. We got into negative dollar for all contracts, all futures, all futures. Who's leading the sell down? Financial leading the sell down. Financial at minus 2.5%. Tech is 1.65. Tech is coming down also. Home builder 1.5. Consumer discretionary minus 1.8, but my review is like not red enough. Only energy is green. Energy is energy is carrying the heavy burden of pulling the index. Wheat. Yes, wheat. Home builder, utilities, okay lah, utilities still okay. Materials also diving. Industrial diving. Communication diving. Russell 10, Russell 2000. Semiconductor also tanking. Everything is tanking. Everything is tanking. Okay, ADM. Yeah, ADM is It doesn't care the market. Even before the conflict, it doesn't really care what S&P is doing. Starbucks, good. Starbucks need to go lower. Starbucks need to go like $80 like that. Vivian, okay, at least coming back down now. As long as it's not green, I'm happy. Children place minus 5.7. Good. Anything else? Crop strike. DWAC. How's my DWAC doing? We wait for the merger first lah. We wait for the merger first. Beyond Meat was actually on my short watch list also, but it dropped a lot lah. It already dropped a lot, which is why I went for Starbucks. Because if you look at the pattern, right, it's like somewhat the same. Farfetch. What is this? All the good earnings gap up, they use all cover back. Foot Locker. Okay, Foot Locker still hanging there. Intel. Kirby is one shipping counter that I'm looking to long, but waiting for it to break up. Oh crap, so sad. Mastercard. Jialat. Facebook. Something tell me Facebook is going to like, I don't know, 140, but I'm not going to short. I'm not going to short Facebook. I think it's very hard to short. New. Oh yeah, I forgot about New. Also going down. PHM. Snowflake, another minus 3%. Okay, Snowflake, I think Snowflake has still a lot of room for down move, but I want to get in second position somewhere lah. I want to try to get in second position somewhere. I mean, maybe now also can, but don't want to load so many shots. Western Union, okay, it's kind of like half. Nicola minus 4. Okay, then let's quickly look at other stuff. Lemonade down. Roblox cannot make it now. Palantir still down. DoorDash still down. Okay, I guess that's it for today. See you guys tomorrow. I'm not sure what to discuss tomorrow though. I think we can go through some portfolio management stuff lah, some more in-depth portfolio management stuff, because I think it is good to bring up a few tips and tricks. I think in terms of portfolio management, right, it's very hard to teach or share like a formula, like a rule book, because it doesn't really have a rule book, but at least from example wise, there are some guidelines that can be given lah. So just to share my personal opinion is that I'm currently still bearish. I'm still bearish side, mainly because of the fact that every time I look for counters with the intention to look long, to place a long, I always find 2 or 3 potential shots, which is not what I want to see when I'm trying to long lah. Canadian Resources plus I mean it's energy company lah. Okay, so hopefully next week Monday we wake up, Rex can go to 470 lah, considering all the oil is recovering. Okay guys, have a good night. You're welcome. Bye bye.